last week it actually outperformed in a weekly basis. I know that's a very small data point, Elijah, but gold was up, I think, 6% or 5%, and silver was up like 13%. But here we are, several percent in one day. But it will, I still think, and not because of my bias towards silver, which I have, but the dynamics of silver are still so fundamentally strong. And there's so much push for this green movement. And then it's the poor man's gold. And I don't mind using that term because if gold gets at a certain level, there'll be people that want to get into precious metals and they'll look at their just savings account and they'll say, I really want to buy gold. I mean, a lot of them make the statement or the thought process. I want to buy gold. Gold's at $3,000 an ounce now. Silver's only at $30 an ounce. You know what? I'm going to buy silver. It's going to get a lot more for my money.
Renowned economic analyst and precious metals expert David Morgan offers invaluable insights into the intricate workings of the global financial landscape, with a particular focus on the precious metals market. With a wealth of experience and a keen eye for market dynamics, Morgan delves into the complexities of commodity trading, exploring the nuances between retail and commercial demand. Throughout his discussion, he provides astute observations on the current state of gold, silver, and platinum, highlighting their respective roles as safe haven assets in times of economic uncertainty. Moreover, Morgan ventures into the realm of macroeconomic trends, cautioning against the perils of inflation and geopolitical instabilities, while also elucidating the potential implications for fiat currencies and the broader financial system. With a steadfast commitment to truth and transparency, he advocates for informed decision-making and urges vigilance in safeguarding financial freedoms. Join us as we delve into the thought-provoking insights of David Morgan, a beacon of clarity in the ever-evolving landscape of global finance.
The new high, of course, is really great for gold. And whenever you get a new high in a commodity or even a stock, I mean, it'll go higher and higher. I've explained many times about upward resistance, but it is a new high that's very bullish because everyone says, well, how high is it going to go? So there's not much selling pressure or any new buying pressure pushes it higher. But at some point, there's what's called a consolidation, or we call it back and filling. These are slang terms that mean that it hits a certain level and then it may fall off and rebuild a base and then move higher. And there's all kinds of charting patterns. You can look at a bull flag, a flagpole. I mean, there's all these terms, and a lot of them have high probabilities, but nothing's guaranteed. So having said all that, I'm very glad to see gold making new highs. And also, some of the mainstream media articles are almost humorous to me, like, we didn't expect this, or how come it's happening, or why is this taking place, and no reason to this, and on it goes. And it's simply buying pressure. I mean, there's been so much buying pressure from the central banks. And as I said, if you're unwilling to sell, any new buying pressure will push the price higher. So there's gold. I'm glad it's leading. Probably needs to take a breather here. My forecast in January was we'd see at least a 13% move in gold based on the 13% for 2024, based on the 13% we saw in 2023. And that, came in around 2,000-ish. So 10% is 200. So, 10% is already and we're not in the season, really, the seasonality for gold that's the strongest. We'll move into that shortly, and then we're going to go into the summer doldrums, which usually is weak for the metals. But there are times it's not always. It's just a probability. As far as silver is concerned, again, I'll use the word I used last time, frustrating. I mean, it's not keeping up with gold. And last week, it actually outperformed in a weekly basis. I know that's a very small data point, Elijah, but gold was up, I think, 6% or 5%, and silver was up like 13%. But here we are, several percent in one day. But it will, I still think, and not because of my bias towards silver, which I have, but the dynamics of silver are still so fundamentally strong. And there's so much push for this green movement. And then it's the poor man's gold. And I don't mind using that term because if gold gets at a certain level, there'll be people that want to get into precious metals and they'll look at their just savings account and they'll say, I really I really want to buy gold. I mean, a lot of them make the statement or the thought process. I want to buy gold. Gold's at 3,000 an ounce now. Silver's only at $30 an ounce. You know what? I'm going to buy silver. I'm going to get a lot more for my money.
David Morgan delves into the realm of investment psychology, likening the allure of penny stocks to the rush of owning a large quantity of shares, even if they lack substance. He cautions against this mentality, advocating for a more discerning approach to investment, such as opting for quality over quantity, exemplified by the analogy of owning one share of a reputable company like IBM over a multitude of shares in a speculative venture like XYZ Mining. Despite the sense of gratification that comes from holding a large quantity of shares, Morgan stresses the importance of considering the underlying value and potential risks. Transitioning to the precious metals market, Morgan highlights the nuanced trade-offs inherent in investing in assets like silver and platinum, while acknowledging the challenges of finding a suitable analogy. He underscores the notion of cost considerations in precious metals investments, drawing attention to platinum's scarcity and comparatively low price relative to gold. Morgan suggests that it presents a compelling opportunity for investors willing to take on added risk. However, he cautions against overlooking the challenges faced by wholesalers in navigating the market's complexities, particularly the burden of carry costs amid sluggish retail demand. Reflecting on the evolution of the silver market, Morgan emphasizes the distinction between paper contracts and physical demand, cautioning against conflating the two. He shares insights gleaned from his observations of the silver market's dynamics, underscoring the importance of maintaining perspective amidst market fluctuations. By highlighting the pitfalls of fixating on one aspect of the market, Morgan encourages viewers to adopt a holistic understanding and avoid making impulsive decisions based on fleeting trends. In closing, Morgan imparts a sense of calmness and perspective, drawing upon his wealth of experience to offer guidance to investors. He emphasizes the importance of remaining level-headed and avoiding the temptation to get swept up in market hype. Through his nuanced analysis, Morgan empowers viewers to make informed decisions and navigate the complexities of the financial landscape with confidence and clarity.
Yeah, I see it higher, higher, and higher. So let me say it higher, lower, higher, meaning we probably will see the silver and gold doldrums in the summertime, where there's not much interest in the metals markets. Again, that's a probability. It's a high probability, not guaranteed. But there's so much going on. It's status quo. And nothing changes from where it is now. You're borrowing, $1 trillion at the clip that the U.S. is borrowing at. The war situation's no better or no worse. The geopolitical infighting between people that are coming to the fore that are populist versus people that are more authoritarian. I mean, everything that's as it is now doesn't change. It just remains the same. You're going to see higher prices. There's just too much going on in these markets that give people the uncertainty of what is their currency going to be worth in the future. And especially if you go into the third world where you look at, Vietnam Vietnam is not a really good example as far as population size, but they are looking at food prices that are going up at such a large clip that they do spend basically whatever they make, that week. I mean, it's pushing toward a hyperinflationary environment. And that's not just Vietnam. There are other smaller countries in the world that have faced that problem. So in those countries, they don't know the difference between the silver market and the silver retail market. They don't care. All they care about is that's a way to protect themselves. And so they may pay a high premium and not worry about it too much because in their currency, it's going to be higher no matter what. And that's kind of the situation that we as precious metals investors have to our advantage. Not that I'm pro-inflation. I'm dead set against inflation. But the idea is that this time it'll be a global market. So it'll be more than just a United States inflation problem. It'll be a global problem. And is inflation under control? Well, of course, the Fed's going to say it is. But in reality, it isn't. And that's why they keep delaying these interest rate cuts.
David Morgan then delves into the implications of impending interest rate cuts, offering a stark assessment of the global financial landscape. He interprets these cuts as a symbolic surrender, signaling a fundamental shift in monetary policy and a disregard for the stability of the dollar. Despite the alarming prospect of hyperinflation, Morgan remains resolute in his conviction that a new system will emerge, underpinned by the enduring value of gold. Morgan envisions a future where traditional currencies falter, giving way to a digital realm devoid of physical cash. He warns of the Orwellian implications of such a transition, where individual autonomy is sacrificed in the name of centralized control. Drawing parallels to apocalyptic prophecies, he alludes to the Christian community's apprehension regarding the potential emergence of a mark of the beast currency. In this tumultuous era of economic uncertainty, Morgan exhorts viewers to seize the opportunity to champion individual freedom and resist the encroachment of tyranny. He invokes the timeless wisdom of speaking truth in the face of deceit, underscoring the revolutionary nature of dissent. In closing, Morgan expresses gratitude to those who have joined him in challenging the status quo, affirming the importance of solidarity in the pursuit of financial autonomy. Through his impassioned rhetoric, he inspires viewers to embrace their role as agents of change in shaping the future of global finance.